Okay, let's just dive right in. The crypto market right now is, well, it's a total whirlwind. You've got Bitcoin falling, XRP making some really surprising moves, and Ethereum is actually breaking records. Oh, and of course, Donald Trump is back in the mix, moving the markets again. Now, while some people are shouting panic, the big institutions, they're buying, and they're doing it in silence. So today, we're going to break down what is really going on and why this moment is way more important than it looks on the surface.
I mean, just look at these signals. You've got the undisputed market leader Bitcoin taking a hit. But at the exact same time, Ethereum's network is hitting all-time highs in transactions. And then you have XRP, which is showing this unexpected resilience. Talk about mixed signals, right? It's a classic case of contradictory information, and it's no wonder a lot of people are feeling confused. And this, right here, this gets to the very heart of it all. There are two stories playing out. You've got the loud one, the story of fear, the panicked headlines telling you to sell. But then there's this other story, a much quieter one, being told by the strategic moves of very big money. So the crucial question is, which story is the real one? So let's start with that first story, the one that's grabbing all the headlines. Let's talk about the noise of panic. This is all about fear, sell-offs, and just, that negative feeling in the air.
So what's actually causing all of this? Well, the biggest factor isn't some technical glitch within crypto itself. Nope. It's the elephant in the room, Donald Trump and his threat of new tariffs on the European Union. So this drop we're seeing, it's not driven by crypto-specific issues. This is classic macroeconomic fear, and it's spilling over and infecting the entire digital asset space.
And naturally, the news cycle just pours gasoline on this fire. Everywhere you look, the headlines are screaming the same thing. Bitcoin's down, major altcoins are in the red, and the overall market sentiment is cooling off fast. This narrative of a widespread decline is powerful, and believe me, it has a very real financial impact. And the pain is absolutely real. We are talking about over $700 million in liquidations flushed out of the market in a very short amount of time. This isn't just casual investors selling a little bit here and there. No. This is leveraged traders getting completely wiped out, forced to close their positions as the prices just crater. They are the ones paying the highest price for all this volatility. And this is the pattern we see time and time again in moments like these. A clear divide starts to form. You have the weak hands, the reactive traders who are driven purely by fear, they sell. But the strong hands, the really strategic players, they just observe. They watch, and they wait for their moment. This kind of price action is so jarring that it's actually causing people to question one of Bitcoin's core stories. I mean, if it's supposed to be digital gold, a safe haven asset, then why is it falling right alongside riskier assets when macro fear hits? It's a totally valid question, and it's creating a whole lot of doubt out there. But here's where we all need to be really, really careful. Because that story, the one of pure panic and failing narratives, is dangerously incomplete. While all the headlines are focused on the fear, the smart money is quietly telling a very, very different story. Okay, so now let's pivot. Let's look at the other side of the story, the institutional signal. This isn't about frantic, day-to-day price charts. No, this is about the deep, strategic movements that are happening, for the most part, behind the scenes. This is just the perfect way to see the two competing realities side by side. On one side, you have the noise, prices falling, macro fear everywhere, traders getting liquidated. But on the other side, you have the signal. BlackRock is buying, network usage is actually going up, and the underlying infrastructure of crypto is advancing every single day. And if you want proof, look no further than this number. BlackRock, the largest asset manager on the planet, just upped its exposure to Bitcoin and Ethereum to over $22 billion. Let me say that again, 22 times billion. To put that into perspective, that's more than the entire annual GDP of countries like Iceland and Jamaica combined. This isn't the action of an institution that's panicking. This is a massive vote of confidence. And it's not just Wall Street either. On the corporate side, you've got companies like Steak and Shake starting to explore using Bitcoin for payments. And looking down the road, you have institutional analysts putting out reports seriously predicting that Bitcoin could be the single best performing asset of 2026. So let me ask you, do you really think all of this is happening because Bitcoin is dead? So here's the crucial point in all of this. The volatility is scary. It absolutely shakes people out of the market. But if you actually zoom out and look at the entire history of Bitcoin, it follows a very clear pattern. It consistently punishes the impatient, and it rewards the patient. This turbulence we're seeing right now, it fits that historical model perfectly. And listen, this isn't just a Bitcoin story. The entire crypto infrastructure is getting stronger. Just look at Ethereum. Its price might be all over the place, but its network is being used more than ever before, hitting all-time highs in transactions. People are actually using it. Then you've got XRP making serious moves to integrate with legacy financial systems like Swift and Chainlink. Meanwhile, Polygon is closing massive quarter-billion-dollar deals for stablecoin payments right here in the US, focusing on building real infrastructure, not just hype. And finally, you've got Solana, which is just entering a whole new phase, focusing on speed, adaptability, and even AI integration. This is real foundational growth happening across the board. And this all brings us to the core truth of this moment. You simply cannot confuse the short-term price with the long-term project. Right now, yeah, the price is weak, absolutely. But the underlying structure, the technology, the adoption, the institutional conviction is undeniably strong. So this all brings us to the conclusion, and really to the key question that you should be asking yourself. Because what we're watching isn't just random chaos. What we are witnessing is a great filtering process. See, the market isn't dying, it's selecting. First, all the impulsive, over-leveraged traders are forced to exit. They get washed out. Second, the weak narratives, the stories that don't really hold up under pressure, they start to break. And third, all of this creates the perfect opportunity for smart, patient capital to get positioned for whatever comes next. So let's end on this. The question is not if there will be more volatility. Of course there will be. That's a given. The real question, the only one that truly matters, is now that you can see the difference between the noise and the signal, will you be prepared when the market inevitably moves again?